Hi, this is Lara at Elliott Wave Stock Market with your weekly gold analysis done on Wednesday, 3rd of July. I'm recording this video 9:50 p.m. in the evening, New York time, Wednesday the 3rd. My last week's analysis expected we had a low in place. That was not the case. Price moved over $40 lower, below last week's low, before turning on upwards. However, my last week's analysis said to use the trend channel on the hourly chart and look for a breach of that channel to confirm that we'd had that trend change. That didn't happen while price moved lower. It has happened now, so I do have more confidence this week in calling a low in place in the short to mid-term for gold. The bigger picture remains the same. Gold is still within a fourth wave correction at cycle degree, which is unfolding as a zigzag. Within cycle wave 4, primary wave A and primary wave B ends up here. This is where primary wave C starts, and it can only subdivide as a 5-wave structure, either an impulse or an ending diagonal. This one, pretty clearly, is unfolding as an impulse. Within the impulse, we now have 1, 2, and a long extended third wave complete. Draw a channel around primary wave C, draw the first trend line from the low of intermediate wave 1 to this low here of intermediate 3, place a parallel copy up on this high here to contain all of this movement, and look out for this fourth wave correction to maybe find resistance at the upper edge of that channel. At this early stage I don't have a target for it to end, and I can't calculate that until I know where the A and B waves within the fourth wave correction are, and then we can use the ratio between A and C to calculate a target. So at this early stage we'll use the Fibonacci ratios of intermediate wave 3 as our possible targets for it to end, with the 0.236 the first likely place at 1315.9. After that, and more likely, the 0.382 Fibonacci ratio at 1399.73 may very well be where this ends, and it's also within the fourth wave of 1 lesser degree price territory. That's why it has a higher probability. Intermediate wave 4 may not move into intermediate wave 1 price territory. Movement above 1672.77 will invalidate this wave count at primary degree, so I'm not expecting movement above that point. The long-term target still remains the same, now maybe only a couple of months or so away. At 1151, primary wave C will reach 1.618, the length of primary wave A. Interestingly, within this intermediate wave 3 down, we have a nice spike in volume right on this candle here, in the middle of the third wave of the third wave of the third wave, and also, again, right on this candle here, another middle of a third wave. So that gives me a bit more confidence that we indeed have had third waves in these positions and that this labelling is probably correct. It agrees with MACD. It sees the strongest piece of momentum right within the middle of a third wave, and now we have a little bit of that classic technical divergence, MACD trending up slightly while price trending downwards. So this is probably where intermediate wave 3 has ended. Intermediate wave 2 lasted 14 sessions, 3 weeks. I'll expect intermediate wave 4 to last at least 3 weeks, and if it takes the structure of a more time-consuming structure like a combination or a triangle, it could very well be longer than 3 or 4 weeks. It could be maybe even 5 or 6 weeks. We'll see how this one unfolds. My last week's analysis for gold had the end of intermediate wave 3 labelled as over here. That was a couple of days premature. Price moved sideways for a bit and then shot down lower, and now the structure here is much more satisfactory. The sideways movement was a continuation of a contracting triangle for a small fourth wave, and this downwards movement from this high to this low subdivides absolutely perfectly as a 5-wave impulse. So this is where intermediate wave 3 ends, and we now have confirmation that we have a low in place because we have a breach of this downward sloping trend channel which I've drawn around minor wave 5. Now we have comfortable movement above this channel, the downward trend is over, the next wave is underway, and this should be a fourth wave correction at intermediate degree. At this stage, from this low to this high, we have a nice 5-wave impulse. This could be minor wave A within intermediate wave 4, but I don't think so, because that would look at the fourth wave unfolding as a zigzag, and that's the least likely structure for it. It's possible, it just has a low probability. What has a higher probability is that this fourth wave is going to be a longer lasting flat correction, which means that the A wave within it is most likely to unfold as a zigzag, subdividing 5, 3, 5. We need a 5 up to complete. At 1, 3, 2, 4, minute wave C would reach equality in length with minute wave A, and that may take another couple of days. At this stage, we can't confirm that minute wave B is over. We could move the degree of labelling here down 1 degree. This could be just a zigzag for minute wave A. We could have B and C, and minute wave B could move lower as a flat. If minute wave B does move lower, it can't move beyond the start of A below 1180.40. When minor wave A is a completed three-wave zigzag structure, then the short-term invalidation point will no longer apply, and for a flat correction, the B wave within it must be at least 90% the length of the A wave. And the most common type of flat is an expanded flat. That requires the B wave to move beyond the start of the A wave so that it's 105% the length of the A wave or longer. So a new low below this point after this upward zigzag is complete is actually quite likely. So this downwards move should take a few days and be quite deep. When that's done, we should see another big upwards movement for a C wave, which would be extremely likely to move beyond the end of the A wave to avoid a truncation and a rear running flat. So overall, we're going to have some really choppy, overlapping sideways movement for this fourth wave correction for another 2 or 3 weeks probably at least. There are at this stage several possible structures this fourth wave can take. I'm labelling it only as the most common possibility. Were I to give you a chart for each of those possibilities, it would just be too many. So I'm expecting we've had a trend change finally now for gold, and that trend change is confirmed. We're in an upwards correction, a big fourth wave correction to last a few weeks. We should expect lots of choppy, overlapping sideways movement, generally trending upwards for the next few weeks, and within it, it could actually make a new low. That's all for me today with your gold analysis, and I hope that everybody had a fantastic week.